first one, we're buying put options on the share price of famous brands. I guess my biggest concern is, maybe if you close there. Yes, my biggest concern here is around, is this for a proper purpose? Like, I didn't know that we're now going to use this fund to start investing. Does this meet, my concern is whether this contractually, it means the contractual agreements between the franchisee and the franchisor, that marketing fund agreement. Do you guys agree with me? And the Consumer Protection Act, is this amount spent for intended purpose? Because if it's not spent for intended purposes, then we are seeing why the franchisees will complain that they are not getting the benefits. That's my first concern. Whilst we are here, because I would then expect to see the sundry investment somewhere in the new balance sheet, because it's an asset, the 122,000. I guess it's okay not to have the VAT on it because put options fall within the definition of financial services exempt supply. Not that I will say this, but I'm just brainstorming in my head. Okay. But I think my second concern, and I guess maybe I can scroll down to the next, oh, well, in my case, in your case, you can see the total for the sundry investment. There's the next one coming, but there's nothing else coming. If it's a put option, this meets the definition of a derivative in terms of IFRS 9. Where is the fair value adjustment? Because it must be accounted for in the business model of a fair value accounting, because and also it's not held for the sole collection of principal payments and interest. So it doesn't meet this SPPI test. So I guess my concern is that it was not, the fair value gain or losses is not recorded. So if I talk about the list of documents that I would expect to see, I would expect to see the agreement with famous brands purchasing this. I want the policy document for the marketing to evaluate if this meets the purpose of what the marketing fund was intended for, including the agreements, to see if we could do something like this. I would want to look at a screenshot of the fair valuation of the put options, either using the binomial model or the Black-Scholes, showing what is the current at the month-end fair value to evaluate if there's a fair value adjustment or it's been accounted properly. Well, I guess it's not accounted, to understand what is the impact. Let's go to the second line, the professional fee payable for put option. This was paid to Hinnon Bosch. My first concern is the fact that this is a related party transaction. Remember who Hinnon Bosch is? If you guys remember, because, you know, when I walk into this assessment, I need to walk in knowing my company and knowing who works for this company, knowing all the company. Like, I need to be a walking journal of this business. So Hinnon Bosch is recorded as a non-executive director on the directors list. So this must be a related party transaction. Significant disclosures will be required, but before that, I hope all the requirements of Section 75 of the Companies Act have been complied with. So my concern is may not have been complied with, meaning what are the list of documents I'm going to request is the board meeting minutes so that I can check who was in attendance, whether the interest was declared, and take it to the declaration interest document. So I need a list of your declaration, or what they call a declaration register, to go and look at whether the interest was declared, and on the minutes again, to make sure that there was a quorum, including Hinnon, but Hinnon did not cast a vote in this transaction to provide the service. And I might ask for his CV or Google it, just to understand whether, is he really a professional investment advisor? Like, what does he know about investments? Those are the kind of documents I will ask. And I would ask, I mean, Hinnon is a non-executive director of Fodjan, which is a PTY Limited. I mean, we know that because it's an executive director, non-executive director, but because our company is not a limited company, I mean, it's not a public company, there might be PYE. Because either PYE as a normal employee's tax, or he might say, no, it's an invoice, I'm doing this as an independent contractor, meaning then in that case, I'll ask for a document called declaration to be to not be charged VAT. Sorry, to not be charged what? PAYE. Remember, if you want to be treated as an independent contractor, you must provide a declaration to the employer to say, do not deduct PAYE from me because I'm an independent contractor. I will pay tax on my side once I receive the amount. I want to see that declaration. Also, on the other side, why is VAT not charged? I would want to understand, is Hinnon not making taxable supplies of more than $1 million? As a result, then is not a VAT vendor as defined. Then last line, reimbursement of marketing expenses incurred, Humphrey Family Trust. Wasn't this the 35% shareholder in the business? Another related party transaction, 200,000. Oh, I'm going to come back, I'm going to circle back to it. To something that I forgot. It's a concern that I forgot. Remember, you go back and edit. Okay, I'm still within my 45 minutes of writing this assessment. So the 200,000, that's a reimbursement of marketing expenses incurred by Humphrey Family Trust. I'm sitting here and I'm saying, Humphrey Family Trust is a shareholder. Yeah, like the substance of this transaction, like what has actually happened? Have they incurred some marketing expenses on our behalf? And then now we are reimbursing them? If that's the case, can I see all the invoices and that they're in the name of Fodjan? And what action, why did we not do it ourselves? Why did it have to go through Humphrey Family Trust? The fact that it's a rounded number with a related party brings me into question those journals that round numbers have a significant risk of fraud as a result of management override of controls. In addition, there is no VAT. Well, I would have expected whoever the supplier is, if the supplier of this marketing expenses knew that the Humphrey Family Trust is doing this on our behalf, then there is an agent and principal relationship between Fodjan and Humphrey Family Trust. And as a result, then Section 54 that we prepared for will apply, because then it means the VAT that is charged by the supplier, it's on the invoice in the name of Fodjan, not Humphrey Family Trust, and then we can claim the input VAT. Do you guys agree? Yeah. Then I would expect that. On the previous line, guys, the concern that I missed to bring into the concern that they capitalize the 10,000 professionals fees, which you can call transaction costs. Do you guys agree? Onto a derivative financial asset. That is inappropriate in terms of IFRS 9. When you've got a financial asset measured at fair value through profit or loss, all your transaction costs get expensed immediately. You cannot capitalize them. Do you remember that rule? Okay. That's my concern. Deepest, how many indicators do we have here? A lot. Do we not? Right. Are you guys wanting to see them, to mark yourself? We're on the journey to get competent, guys. Are we on a journey? We are. Let's see. Let's bring it on. Yes, I agree, Nokubonga. They also asked you to make this detailed description of what we are requiring as a list of source document. Let's see. Absolutely. Someone is also asking if fair value is not at year end. Absolutely. But if you do monthly management accounts, you can do fair value accounting every month. Absolutely agree. Yeah. Oh, no. Majanga, is it just stating or identifying the document adequate? No. And I think that's what Nokubonga was explaining, that you actually need to go into depth about why you need that source document. You've got to give us the why and the why. Yes, not probably, Anele, you definitely need it. Lerato, this task was savage, though most of the taxes here were not triggered. Absolutely agreed. And so how are we going to think of tax consequences on things such as put options and independent contractors? Lerato, I expect you guys remember, and the profession expects you to have passed CTA at this point, or to have passed ITC. So you've got that knowledge. Don't underestimate the amount of knowledge that you have. Keep refreshing it, especially if Fedi is your tax lecturer, would want to make sure that the knowledge that I taught you in tax CTA still is intact. Okay, so when you look at the indicators, the put options, whether the put options is a legitimate marketing expense, I'm sure most of you got that one. Indicator 1.4, indicator 1.5, concerns about the involvement of non-executive directors in section 75. Okay, concerns regarding the substance of the marketing payments to the trust, and raise concerns and tax concerns, and for each concern, list sufficient documents or records to be inspected. And if you want to show off section 20, oh yes, we forgot section 24 capital L. Okay, how could we? Section 24 capital L to say, remember, if it's for tax purposes, I think this one, I wouldn't expect you to know this one. But if you knew it, I've just made my night. This one, because it was not even in your CTA syllabus, but section 24L is a tax provision for put options and call options. Okay, so what it's saying in summary, look at me. So what it is saying, section 24L, basically what it's saying is that if you pay how much do we pay to buy this put options? 122,000. For income tax, for accounting purposes, yes, it will be a financial asset, which is on the balance sheet. For income tax purposes, you don't get immediate deduction. You get deduction on a day-by-day basis over the term of the option until expiry. So if it's a 90-day, if you mute, if it's a 90-day option, then you're gonna get a deduction of 122,000 every day for 90 days. Do you get what I'm saying? That's what section 24 capital L says. Or discussing the PAYE or VAT for the services provided, including the agent or a principal. A relationship in section 54. Okay. You are nailing it. But I agree, some of the texts were quite difficult, but it's okay. Remember, we don't want you guys to get all the indicators. You don't necessarily have to get all the indicators, but you need to get a lot of them. Right. Is there a question? Let me see. Anyone can unmute if you've got a direct question. I will take one. Okay.
Do I have to press anything? I have a question. I have a question.
There's a question in the room.
So it's regarding the competency of Bosch. Because on that you mentioned, like, does he have experience to provide professional fees for that?
Correct.
And looking at the pre-release, can I add that paragraph that says the board of directors does not believe that a person with intimate knowledge can be an executive director. They said that they can appoint anyone else. They don't care about the professional.
Yeah, you can add that definitely.
Okay.
And you will be deserving of indicator 1.5.
Oh, okay.
Involvement of the non-executive director.
Okay, thank you.
Perfect, thank you. Moving right along. So now let's do this additional 3 expenses. These ones are mostly the same, so it's easier to just deal with them at once. On the 25th of November 2022, if that date is not triggering anything, it must be a concern itself. Are you with me? I hope it's a concern already. 25th of November, it's always telling you something, eh? To cover monthly expenses to be incurred by marketing officer, Southern Region in December 2022. To cover monthly expenses to be incurred by marketing officer, Northern Region in December 2022. To cover monthly expenses to be incurred by a marketing manager in December 2022. And the payee was Chris, James, and Barbara. 15,000, 15,000, and 35,000. What are the concerns? I'm giving you a minute again. And the online team, you can push them in an aggregate of your concerns in your and lists of documents in your chat box. Don't send one at a time. Type away and push send once. Yes, Palisa, we're not only required to deal with VAT. It was tax implications. They didn't say, they didn't narrow it down to VAT only. See, Larry has already dropped his answer, but Larry, your answer, I will expect more. I want more meat. Okay, well, I guess I said be brief, but I want more concerns. So you don't have commas. You only have one concern. Shall we go? Have you written concerns? Absolutely. I think I'm seeing a lot of concerns coming through online. Absolutely. I guess my first concern is December expenses being paid now. So these are prepayments or advance payments. Do you guys agree? I would not expect them to be under the marketing expense column. I would expect them to be under a prepayment column. Yes, the total column is fine. Are you with me? So that on the income statement for the month, they are recorded in the correct month. So this one, it goes back to that indicator 1.2 about cutoff, recording it in the correct period. And also the substance and the legitimacy of this expenses. Are they going to spend 15,000? Can they not spend and then we reimburse? And like, why are we giving people cash to like, I've never heard of this. What is the policy around this? Can I see the policy around giving employees money? And what do we do with under or overspending of the 15,000 or 35,000? Because what are the chances that they're going to spend exactly 15,000? Are you with me? And the fact that it's getting paid on the 25th of November, the payday for most people, it tells me that there may be linkage to salaries and wages and payroll related. Where's the PAYE relating to this? And are we going to be able, when they submit proof that they did really spend this on legitimate marketing costs, are they going to submit invoices for which we can claim input VAT? We spoke about PAYE. I guess we want to understand the authorization level. I mean, being prepaid expenses, again, yes, even though I'm saying for accounting purposes, I don't want to see them under marketing expense and they must be in a prepayment column, or Larry calls it a trade receivable. It's fine. For income tax purposes, it's okay. They can be allowed as a deduction in terms of Section 11A because it's an expenditure actually incurred. Why? Because payment was made. That's actually incurred. In the production of income, hopefully. In the carrying on of a trade, and it's not of a capital nature. However, we need to get more information. I actually want a list of all your prepayments because yes, I understand this is going to be in December. So Section 23, capital H, the first proviso is not going to prohibit the deduction in terms of Section 11A because it's going to be expended within 1 month, which is within 6 months. However, I want to see that the aggregate of all your prepayment expenditure, currently I see 65,000, but I want to see together with all other prepayments across the group, well, across the company, not the group, are not exceeding 100,000 because, oh, well, actually, in this case, because they're going to be expended within 1 month, you don't even have to do that test, right? Okay. You don't have to do the aggregation test. So I don't need that list, actually. I was getting overexcited. Okay, so I'm comfortable that Section 23 capital H prohibition will not apply here. Okay, I think you guys brought in everything. Any other question before I move on? Oh, let me show you the indicators. So advances, question the nature of the advances or prepayments to cover marketing expenses and raises governance and tax concerns. For each concerns, less sufficient documentation that we spoke about. Is there a question in the room? No? Online?
Betty, just a quick one.
Go for it.
If
Introduce.
It's Shadi speaking.
Go for it, Shadi.
If I had raised a concern around, I see there's a difference in amounts between the marketing manager and the officers, to then ask for either a policy or a delegation of authority kind of document that distinguishes, different grades getting different amounts, or something to that effect. Would I have gotten an indicator for that?
Definitely, 1.9. So you are unpacking it and give us the detail as to what you're looking for in the policy around how much each one gets and how they account that they spend the money appropriately for the legitimate marketing costs. Absolutely. You are flying with it, Shadi. Right. Let's keep going. I'm giving you a minute. Well, not now. Let's look at what are we paying for. At the end of the month, 30th of November 2022, sponsorship of national team, the monthly contribution to South African Hockey Federation, 575,000 inclusive of VAT. Same date, transfer of marketing fund contributions from Fodjan's main bank account. You're not paying anyone, it's coming. Oh, this is the money coming in. And then at the end of the month, the closing balance is now 5.4 million, and with the totals for each of the other accounts. The control account, the receipt control account, the marketing expense, the VAT control account, and the investment balance. You've got a minute to write your concerns. And the guys online, push your responses into the chat box in aggregate again, please. I love what you guys were doing. Malechema, Blessing, Reabitsun, Kosinati, Itai, all of you guys. Keep at it. Keep at it. Guys, you're not pushing into the chat box. Keep them coming. In the room, are you done? Are you still writing? Right, I've got a couple of concerns. Let me go. Right, on the sponsorship of national team, the monthly contribution, that is a significant amount. It accounts for more than half of all the contributions that or all the payments that we've been making. Are you with me? So it's a significant contribution. What are we contributing for? What is Fodjan getting in return? Are we sponsoring? Are they printing our name on their t-shirts? What's happening with the sponsorship of the South African Hockey Federation? Can I get the agreement? Or is it a pro bono contribution? Because if it's a pro bono contribution, then it's not a legitimate marketing expenditure unless there's something in return. Are you with me, guys? Okay. So it should be around that. And I guess from a tax consequences, depending on whether it's a legitimate tax marketing expense, it will be deductible in terms of Section 11A. But if not, then I guess I would need Section 18A certificate to understand if it's donations that I can get a Section 18 capital A deduction. And if it's a donation, then there must be donations tax being paid by Fodjan as a donor at the rate of 20%, depending, or 25%, depending on the amount of donations we've made in the current year. The second concern, transfer of marketing fund contributions from Fodjan's main bank account. Hang on. So the franchisees, who do they pay? It looks like franchisees are paying who first? They pay into which bank account? Into Fodjan's bank account. And some fudging could happen there before the amount come into the fund. Cheapest. That's my key concern. Why are the franchisees not paying directly into this bank account? And where is the VAT output recorded then? Where's the VAT output for this 2.7 million? Do you guys agree? Because remember when we did the research, we said when they pay, there must be VAT output. When they spend, there must be a VAT input. Are you with me? And then the 2.7, remember, will be gross income. And that's when you mentioned sections 24. You know, I always confuse 24 and 24C. Yes, the one that talks about future expenditure. Okay. Section 24C, because then now we've got this big money that we didn't spend as yet. Are you with me? Well, are we going to be taxed? Yes, it looks like it's going to gross income, but there must then, and then we're going to get a few deductions, but then there is a section 24 capital C deduction that we can claim. And I guess overall, if I sit back, guys, this fund is just growing and growing in money. Do you guys agree with me? Now the balance is 5.4 million. Maybe that's why these guys are not getting the benefit of marketing, because you're not spending the money on marketing. Are you with me? Can you spend the funds? Can you advertise? Can you market? And hang on, this is a hell significant amount of money. So if it's such a large amount of money in a bank account, is this not interest earning account? Where are the returns? But because it might be starting at Fodjan, and you keep it in Fodjan for a lot of days, and you only transfer it into this account at month end, all the interest is sitting with Fodjan. Is that fair? Should that interest not be attributed to this account? Should. Are you with me, guys? Let's see. Yeah, concern on the South African hockey, whether the sponsorship will benefit the franchisees, the largest expense item, marketing fund, concern that the marketing funds are not in a separate bank account, or completeness of transferring funds from main bank account into this marketing bank account. Raises, you see what they said around tax. Overall, for this whole task, they said raises at least one valid tax concern. Raises one. You know, when I saw this, I was like, is Cycle now donating our profession? Okay? I mean, so many tax concerns, but maybe I'm biased because I'm a fan favorite of tax. So I wanted maybe for them to say raises at least 4 valid tax concerns. Maybe that was going to be taking it overboard. Do you guys agree with me? Let's take questions. Do you see how you nail this task? Let's start with, yeah, go for it. Tanaka, just also help me, then just so I can know which hands I'm taking. Guys, I'm hoping whilst I'm taking questions, you guys are counting the number of indicators you got, because we're going to discuss where you are landing. Are you at a BC or at a C or at an HC? Nothing below that. Let me see. Okay, sorry. I can actually see it from this side. I want to see and call in the hands up. Escape. Ah, there we go. There we go. Oh no. There we go. Right. Hand number 1. Ora, go for it.
With regards to the 575,000 that was starting off in Fodjan's main business, would it be wrong to assume that maybe they send one invoice covering the license fees and the royalty fees and all the different franchising fees, which would then include the the marketing fund, and
So
only then they reallocate to the marketing fund?
absolutely. If you document it that way, that's a reasonable assumption that the reason is perhaps starting that side at Fodjan, main bank account, was because you are paying 5% or 4% during COVID for this and procurement and that. Maybe it comes as a bulk payment and it comes through, and then your concern will just be around complete transfer of the marketing rather than raising a concern around why it's starting there to start with. So you are still on 1.11 on completeness rather than where the starting point. Happy, Ora?
Yeah, okay, thank you.
Cool, thank you. Any other question? In the room, it looks like we are nailing. Okay, Tsolopili, go for it.
Evening.
Good evening.
Yes, I have a question around the tax implications, especially concerning the main account. So I'm not sure if it's a stretch to raise it as a concern, because the case law basically states how if they're receiving the funds but it's not for their benefit, it should be in a separate bank account. But now if there's a concern that the main account is not separate from the marketing account, is there a concern around whether the company is actually receiving these funds, and therefore there are tax implications upon the marketing funds that they're receiving?
So Tsolopili, it's in this case, it won't be a concern. It would have been a concern in a case where we are saying, or they're saying, they are not receiving this for their own benefit and they want to ring fence it and not account for it as gross income. In that case, then it must be received directly in a separate bank account, like what we do with deposits. Remember what is that court case? The golden.
Is it that one?
Not the Geldenays, the golden dumps.
Golden.
Yes, the deposits where you are getting cylinders or you're giving cylinders with gas, and then you are taking people's cash, but you need to put it in a separate bank account so that it's not gross income. But in this case, because we are having gross income, then that necessity to for tax purposes to go directly into a separate bank account is not necessary. Does that make sense?
Yes.
Good, thanks.
Thank you.
Thank you, Tsolopili. Any other question?
Freddy, just a comment on the text for Google Ads. So there's, I mean, it's based on experience. So there's this text called DST. It's basically your digital service text. So if I mentioned,
say the name again. Repeat the name.
Digital service tax, which is DST. So if I'd mentioned that, because it's the tax that is levied on the digital services, basically is countries that are in the digital economy environment. So it goes along with the invoice for Google Ads. So will that be a consideration in terms of competencies?
Absolutely. Your marker will just need to do a quick research if it hasn't been discussed in the marking session, marker training, and consult and make sure that you are not telling us something that is not right. And if indeed it's right, then we will discuss it across the markers, and then it will be a valid indicator as raising a valid tax concern. So it's not limited to only what we know. Sometimes we learn from you guys. That's why we mark the first 100 and just make sure that we pick up things that we haven't thought of. And we remark the 100. Sorry, forgot to put that part. Kamohelo? Oh, sorry, you've got a hand up also. I'm going to come to you, Philip. Kamohelo, go first.
Hi, Freddy. I wanted to ask, is it incorrect to assume that the document for the last entry of the transfer would be remittance advices, with assumption that for every revenue that we get from the franchisee, there's going to be a separate invoice that we're going to issue for them to pay?
Say the question again.
I wanted to ask, is the remittance advice the correct document for reference in terms of the entry? With assumption that the franchisees make, we invoice them for every entry, like the marketing and other related costs that we incur on their behalf.
Yes, they could be invoices as well. There must be an invoice. Remember, that's our that's our revenue as well. So we must be generating an invoice. And yes, there must be remittances. There are going to be little remittances from each franchisee, but as well, there's going to be a big remittance from main bank account into our bank account. So
Okay.
you can request for that document as well. Okay.
Thank you.
Thank you, Philip. That's the last question. In the meantime, I would like, whilst Philip is asking the question, I want every one of you guys online to start typing what are your key learnings from this task that you're going to make sure that you master ahead of the 29th of November. I heard that you need to finish on the 29th. I thought I could sneak in another preparation of the 30th, but clearly not. And you guys are going to be sleeping. So, Philip, you guys, whilst you guys are typing, what were the key learnings? Philip, you.
Okay, thanks, Mr. Fedi. So my question is on the approach during pre-release, because the same way we were required to do the tax issues relating to the marketing fund is similar to how you also set up in case study 3.2.
Really?
Yes, where you just say you need to understand the business, right? So what I struggled with was that it was broad. It's something that you just wanted to go through the general deduction formula in whole so that you are well prepared, right? So in this one, I think one needed to go through and see what type of expenditure would I expect.
Back to Larry's first point.
Yes.
To say, what marketing costs are they incurring?
Exactly. So finding, like when you look at that, it was going to be difficult for someone to think about Google app. It was going to be things.
All these things, I don't think there's any way you could have preempted them.
So how could I prepare myself so that on the day I just apply myself? Because
all right. So for this one, I think we do agree that it was, I mean, you prepare gross income definition, the receipt of the contribution, you prepare the deduction in terms of 11A. We're not buying any capital asset. I'm not anticipating any capital allowances, but there's a net profit that the unspent amount, future expenditure, section 24 capital C. Are you with me? Then I do the VAT implications. I mean, that's as much as I will go. And you will still be competent. Different to EPC case study 3.2, where I said, guys, go learn the business and go and learn the income tax implications of the business. In that case, you go to the income statement of the company and unpack what is sitting in every single line item. You go and look at the balance sheet of the company and you unpack each and everything. You are not given that in this case, in 3.2. The balance sheet and income statement, I think, were 4 lines. It was quite summarized. You go to the slides and go and pick up the issues. You will see that we've got EVs, and the EVs These are assets. Is there a capital allowance? You go see, we like investing in our people and we have got learnerships. Then you go to section 23H. Then you read, oh, we also pay foreign suppliers. Oh my word, there will be section 25D. There will be section 24I. You go line by line, reading the whole IOD, PRI, reading the whole PRI to identify possible tax implications in that situation. In this case, it was not triggered to that far end. Does that make sense? Good questions, guys. I'm hoping everyone is documenting exactly what you've learned in the session, which you're going to, by Saturday morning, when I'm not sure, I think it's Rendani or Elton kicking off. When they kick off, they would expect you to be at that level that you've learned. Now let's start doing something different and maybe documenting, writing. How do we perfect all those other skills? Are you with me, guys? Now identifying is so easy for us. We do line by line and we are critical. Are you with me, guys? Okay, and then the guys in the room, I will chat to you. Guys, thank you so much. Yeah, I'm glad you stayed the course, and yeah, see you as the workshop continues. Do I close it here, Ere? Fantastic. Right, thank you guys. Cheers and have a good evening.
Hi, Fedi.
Bye.